Good morning to all traders and welcome back to another Markets and Waves. Yet another very interesting week with last Friday being quite a day since we've seen the US index turning move related to yields and the bonds markets and treasuries. Not really what we're going to talk about though, because we're really focusing on Elliott Waves here. So today, with that said, we're going to have a quick look on the US index, the euro, dollar, pound, dollar, yen, and the prices of gold. Now, as you recall, last time we were talking about this particular move to the upside being sort of rejected here at the top, and we were looking for a correction. Now, this correction to me, has taken a much deeper, steeper, a break to the downside. Which makes me think perhaps the upside move has really ended here, and that was where the intermediate wave 4, that's intermediate wave 4, and then we're going to continue lower down as expected for a while now, since especially we changed our correction here into flat instead of, if I'm not mistaken, we had an ending down in 5 or something. Now, why do I think that it has ended is because we've actually broken outside the base channel, and the other reason is that the correction over here, is quite deep, and we could assume that the correction in wave 4 should really be very small, like 10% or so, if we just follow some Elliott Wave guidelines, not rules, which means that my 3 could have ended here, my 4 is here, and the 5 is here. But if we look at the duration of the correction in wave 2 and this assumption, it's not really looking as like a nice structure. This sort of correction time-wise looks much better, but then this sort of correction price-wise looks much better. So I am going to remain a bit careful, to be a bit cautious here, and keep an eye on the Fibonacci retracement levels. We've done the 50, and next one of course would be the 61.8. For now we can assume this is A, B, and C, which means my extended, the extension in wave C is also quite large, which adds to potential leg reaching to 161, meaning that this is a 3, not a C. But we have to, as I said, remain cautious and always expect that move to the upside. But I am more keen to have this. If we assume that the 4 and the 5th should be here, and then most likely there. Let me just make the change as well. Oh, excuse me. That should be the 3. Yeah. 5, the 4 there. More friendly for this particular scenario. Despite there is, of course, there is mixed signals here, but because of the euro dollar as well, and because of the pound dollar as well, I will actually put this down as my main scenario, which is going to be a case where this is 1, 2, 3. We're going to see probably a correction in 4 here, and then 5 for 1. I doubt this is going to be the A, because we're going to go to a very deep level to consider that this is 1, 2, 3, 4, and 5. It would be a bit of a thing here, unless if it would be an open-ended diagonal, but they don't really appear very often. Now, euro dollar, do not say I did not tell you about this potential reversal here. We are here in either wave 2 or wave B, in the primary degree. So either way, we're moving up with a 5 wave move to the upside. That is my 3, very clear one. We're expecting 4 and then 5. That will be the minor. We get the 2, the 3, the 4, and the 5. I'm going to head to fresh highs. Now, what we can do, since we've got waves 1 and 2, we can use the Fibo over here extension, go all the way down to the low, and look at this, my 161 exactly done, which means my 4 could likely get down to around the 100 Fibo, 170.72 or so, and then from there move all the way up to 118.22 or even up to the 118.50 or so, since both guidelines can be expected. Now, if we assume though my wave 5 is going to be equal to my wave 1, we can already come up to 118.54. But obviously, when we are going to get the correction in wave 4, you can simply move our wave 3 here and wave 4 to the low and measure the 30.2 Fibo extension and the 6.8 Fibo extension as well for potential levels in wave 5. Ideally though, what would be a nice idea, perhaps I'm just saying here, wait for the correction down. Well, there's two ways to trade this. One is wait for the 4 and trade the 5th up to the previous stop at least, or the other one is that to wait for the 5th. Once the correction is done in 2, then trade that one. Okay, but either way, now we're looking at more upside, and currently the levels that we're looking at, let's just check. Wave 2 did the 78.2, so my wave 3 possibly is going to do the 23.6. Okay, so which is very close. Maybe we're going to go a little bit lower down, because I mean these guidelines are just guidelines that don't mean much. But do note that we can expect a fair correction, yeah, in the next few trading sessions. And perhaps that larger signal is the one that will be following the correction and the move to the upside. Okay, so I'm talking about this one. That's for the euro dollar as well, guys. So on pound, well, we had a few attempts here to break this descending channel. We managed to hold. Not only this, now this move also remains impulsive. Yeah, because we did actually remain above wave 3 here of the previous leg. Okay, and what does this mean is that we are quite bullish. Okay, this is what it means, because usually when you want to see a correction, you know, you're going to go down to the 61.8 and even to the previous wave 1. So the higher the correction ends, the more bullish is the continuation going to be. Now, with that said, this is assumed to be again a wave 1. Okay, and we're probably looking at wave 2 here, and then a continuation up, a very similar case to compare to the euro dollar as well. Now, if we do not break the channel, obviously, then most likely it's going to be a case that we're going to have to consider this as some sort of, you know, might be WX, A, B, and C for a W. That seems like an open diagonal over here. And then you know, W would be the VX, and then we're going to get the Z as well, which means perhaps, you know, we'll have to call this an ABC if it's going to be part of a triple zigzag, because an ending diagonal in wave Y of a triple zigzag cannot be seen. Now on dollar against yen, we were looking for a change here, guys, because we've had this dramatic move to the downside. If you remember, we were looking at this to continue higher up, and obviously without getting the leg expected, and with the break of the previous swing low over here, that looks like a bit more bearish than it does even mixed, to be fair. Because we also re-ended back to the descending channel here. That means that this is an EBC for me, W, this is a simple zigzag for X, and most likely this is going to be an A. We're going to get the B, and then we're going to get a C for W, X, and Y, which means we're still currently 1, 2, 3, well, either 4 and 5 and A finished, or 1, 2, 3, we're going to get 4, then 5, then B, and then C, okay? So one or the other, but in either case, we want to remain within this downside channel or move lower from its top. But in the short term, we can expect, of course, any sort of correction to take us higher to higher levels. Now, we did break the 61.8, it looks like on the downside, and we are heading for the 78.6, 109, 113. If we look at this as a bearish move, which we should anyway, well, we can, if we just look at wave 3, it's we can assume that we can get up to the like 38.2 and anywhere between this area. But let's just compare with the first wave. Well, we did the 50% over here, so it's very good opportunity that we're going to make also the 50% here. So any upside, is not to be seen as a reversal signal, but more likely as a signal that this is going to be a correction and a continuation to the downside. Now, one might suggest that what if this is 1, 2, 3, 4, and 5? And I will tell you, well, it looks like, that looks like an ABC rather than a 3, which means, this is 1, 2, 3, 4, and 5 most likely being the case, yeah. Because you've got 1, 2, 3, 4, and 5, which means, we're not really looking at an impulse here where this, as expected before, is going to be a wave 1 of some sort of degree. So this is the one for the dollar yen as well. Now, quickly on gold. I said that gold is looking quite bullish since we've had this correction down here, clear ABC, and we were expecting multi-structure move to the upside. Is exactly what's going on. Done and done. My wave 3, since volumes increase as well, yeah, with that 150 extension for now, which to me means that this is 1, 2, 3, 4 internally. We're going to get 5 higher up. Now, if we remain outside this channel, guys, or close at least this level, then obviously that's going to be adding to the bullish bias more than adding to the bearish one. So we're looking at the 1800s again now. Put this on your watch list and keep an eye on these levels. Now, at some point, and probably, most probably when we move a little bit higher, we're going to get a nice bearish divergence, bearish hidden divergence signals here on the MACD and on the RSI, which most likely is going to be the beginning of, it's going to sort of trigger or signal the correction in wave 4. Okay, so we need to look where wave 3 is going to go, so that we know where we can expect wave 4 to end, and then continuation up, which to me, multi-structurally speaking now, is going to take us around the 1830 something or 1850, depending, of course, well, perhaps even higher. Or maybe I should change that down 1 degree, because if we look at this multi-structure move to the upside, then my wave 3 is probably going to get to around 1900s. Yeah, because we're in the minor degree. Otherwise, that's going to be a different case, and we do not have a 1, 2 over here. That's my 4. So we're expecting prices to get above the 2075. So that would give us the possibility to reach that level, if my wave 3 would be around the 1900s. Okay, so that's going to be all for this Monday, guys. Thank you very much for watching. In case you have any questions, do not forget that you can feel free to go ahead and ask in the comment section or YouTube section. Thanks for watching, and we'll speak again tomorrow.